Hi everybody, this is Steve Rising with Thin Slice Trading at the Forex Trading Institute. I want to take a little bit of time here today to talk a little bit about planning a trade in the Forex market and price action in the Forex market. One of the things that really distinguishes the consistently profitable trader from the inconsistently profitable trader is their ability to plan for trading setups. The reality is everyone makes money trading. Once again, the distinguishing difference is that individual who can keep their profits and grow their profits and then at the end of the month pay themselves. The common scenario is to make money and give it back, make money and give it back, what I call the 50-50 trader. And once again, one of the key characteristics is that individual who can grow the profits and pay themselves is their ability to plan a trade. Some of the benefits of trading Forex is the Forex market is very range bound or in sideways conditions, and so because of these consistent range bound conditions, it makes it easier to plan for trades as well as far as what we want to see. This is a daily chart that we're looking at right now, and our most current activity is up here in the upper right. This is a little bit of last week and this week, and we can see here that there's a very definable bottom of range at this point right here, which is at a solid number of 103. Our top of range is a little less defined. We've got really two areas here. If we look at the overall range here, if I were to count each one of these sessions, there would be 6 days of activity. 4 of those days our top was at 104. 2 of those days we made it as high as 104.50. What this allows us to do is we can now start to plan for reversal activity at 104, which is our current top, and reversal activity at 103, so we can start to plan for trades. It also lets us know that as that range continues to develop, eventually price is going to breach or clear that top or bottom of range briefly. We can see that type of condition that I'm talking about back here where we had a very solid range here. Our bottom of range at 98, our top of range at 99, and then we had this one session where we broke the top of the range. That momentum, not trend following, but momentum continued over. And that's another key characteristic to understand is that the Forex market is probably the most difficult market to use trend following techniques. Another reason for inconsistent performance because the market is rarely trending. Another issue with trend following techniques in the currency pairs is we'd have to trade with very large stops. We'd go through these periods where 3, 5, 10, 14 days in some cases we're in these sideways conditions, and then what is often perceived as trend-based movement, which is really just quick momentum as price clears that top or bottom of range, happens in a very short period of time, and then the move is over. So it's important to understand that to become a consistent, solidly profitable Forex trader, we need to understand the characteristics of price action. Once we have our arms around the characteristics of price action, we can become a very consistent, what I like to call a high probability trader. And that's what we teach here at the Forex Trading Institute. We teach our thin slice trading methodology that has 7 black and white strategies that happen the most frequently on a day-to-day basis in the Forex market, but we use them to interpret price action. In other words, we follow basically a set of rules in relationship to price action. So we can scroll down here and we can see here that 103 was our bottom of range, 104 was our top of range. We can see that we have here a very common pattern as a double bottom at this point, which indicated the reversal activity. And then the other thing that we can see is that the move that we had when price finally cleared after that double bottom was a very quick move that occurred right here at this point right here, and then now price has gone flat as we are back to what we call our point of origin, or where we were trading before we had our sell-off back to our that created the left side of our double bottom, and now price has gone flat, and it's a pretty high likelihood price will go flat again. So we can now plan for trades. Once again, we can plan for a similar price action or pattern to emerge back up here at 104, which is our top of range as we move forward, and the same thing on the south side here of our range at 103 at our bottom of range. So once again, this gives us an opportunity to really work off of a high probability format. In other words, if we were to look at it from a gaming standpoint, the professional gamer doesn't place a bet just because there's something in front of them to bet on. The professional gamer is willing to fold and wait until the odds are in their favor to place a bet. The same holds true in trading. We need to wait for the correct market conditions to occur and then understand that that's where we want to place a bet. So what we do here at the Forex Trading Institute, our traders, is we can place an alarm here just in front of our top of range, and we can place an alarm also just to the north side of our bottom of range to alert us when price is in that particular vicinity. Then what we need to have happen is we need to have one of our 7 strategies develop. Of the 7 strategies that we teach, strategies 1 through 4 are for these predominant range-bound conditions. Strategies 5 and 6 are for when we clear that top or bottom of range, which we consider momentum-based conditions because those conditions are so short-lived. And then strategy 7 teaches us to trade fundamental announcements or the price action or activity around fundamental announcements. So once again, one of the key attributes that distinguishes the consistently profitable trader from the 50-50 trader is they learn to plan for trades. They know exactly where they want a trading setup to develop. They know exactly what that trading setup is going to look like. And as we teach with the thin slice trading methodology, we also have a very precise entry strategy. So we know exactly once the setup develops exactly what we're looking for, all the way down to the minute that we want to consider entering. This allows us to work off of a very tight stop. We use a net 10 pip stop. In other words, that includes transaction cost. So our stops are actually tighter than net 10. So it's a very low risk form of trading as well. So I encourage you to take some time to visit our website at theforextradinginstitute.com to learn a little bit more about interpreting Forex price action, trading these consistent patterns in price action that occurs in the Forex, and our thin slice trading methodology. Once again, I'm Steve Rising with Thin Slice Trading at the Forex Trading Institute. Thank you for your time.